Well, this week I did catch up with the Chief Executive of Australia's biggest company and biggest bank, Matt Comyn from the Commonwealth Bank. And front and centre of that conversation is the performance of the Reserve Bank. Matt Comyn, always great to chat to you. Can I put to you that the experiment that the Reserve Bank came up to try and glide inflation lower while keeping as many people in jobs as possible has actually worked? And one of the greatest beneficiaries is the Commonwealth Bank.
I think that's right, Ross. I mean, I certainly think it has worked getting back into the target range. Obviously, the RBA, both the current governor and the former governor, who I had quite a bit to do with, really cared about keeping Australia with as low unemployment as possible. That's actually come at a tougher political trade-off, because actually having putting rates up faster and further would have created a shorter cycle. But in terms of inflation, may have come down faster, but actually more people would have lost their jobs, which in aggregate would be easier, I think, politically. But of course, if you're one of those people that has held onto their job and otherwise would have lost it, it's made a big difference. And you're right, insofar as low unemployment is a big driver of low loan losses for the bank. But it's another example of our performance is inextricably tied to the underlying economic performance.
Sure, but it was an experiment by the Reserve Bank and by the government to try and do this. It really hadn't been tried in any major Western economy in the past. It's actually worked, and that might be, if you like, the marker for the way in which central banks behave in the future when there's an economic downturn.
Yeah, of course, and any central bank is dealing with real uncertainty. And I mean, the RBA could have chosen to keep hiking rates, as you said, as many other countries did, and that would have meant that unemployment would have increased faster. Inflation may have come down more quickly, and they may have started the rate cutting cycle, but the aggregate, and it's a calculated risk, and there's certainly risks associated with that approach. So, I mean, I'd be delighted as both a citizen of Australia, but also for the leaders who've made that decision. If we continue to see inflation within the target band and we go into a easing cycle on rates with Australia near record levels, low levels of unemployment, that in aggregate is an incredibly good result.
So if you and I both agree on that strategy having worked, why is the Albanese government apparently in so much trouble in getting re-elected? What do you sense is the disconnect between what people are feeling and what the economic outcome appears to be?
Yeah, and look, there's a couple of elements within that. One, in the period going through COVID, you see a huge increase in household incomes, obviously on the back of stimulus, and of course, nobody knew how devastating COVID would actually be, how quickly they'd be able to restart and reopen the economy. So there was an enormous amount of stimulus. Households have felt that stimulus unwind, and of course that feels like a loss of household income. Households have been under real pressure. We see that very clearly, particularly in sentiment and conversations we have with customers. They're having to make real sacrifices. And when there's that sort of pressure and the feeling of a deterioration in their own financial position, it's quite natural, and you see this globally, there's a lot of pressure on the incumbent governments. And notwithstanding the government is simultaneously criticised in this instance for spending too much at times around whether that be electricity rebates or not, we see the other side of that as well in discussions that we have with our customers or focus groups where people are saying the government aren't doing enough. So it's a very delicate balancing act for any government, and of course when economic conditions change and change quite sharply, and almost nobody expected sort of 4 years ago that rates would have gone up at the rate and to the peak that they have. And as you said, a more conventional approach may have been to take the cash rate above 5%. So I think it's a testament to the decision makers if we can manage to walk that narrow path back into the sort of optimal target band of inflation with the smallest impact on unemployment, recognising that for households and for businesses, difficult, particularly last year, hard year, people expecting rates would have come down earlier, kept getting pushed out, made it very sort of frustrating for many people.
Okay, so I hear from other business leaders, well, it's a fairly common thing, that they believe this government is anti-business. Right. Now, you've got great results. You've just said that there's been a great economic outcome because of the government's strategy. What's your own sense about the government's attitude towards business?
I mean, look, my personal experience is I don't feel that. I mean, obviously I know presumably a number of the people that you would have spoken to as well. I think it depends quite a bit on the portfolio. I think perhaps it's fair to say that some of the IR changes are the least popular across businesses. I think there's always support for, greater sort of deregulation settings to be able to help with further investment. We deal with lots of parts of the government. Our Primary Minister is the Treasurer. I certainly don't feel that that's his attitude, either publicly or privately, and I recognise that being the Treasurer is difficult. Whichever side of government you're in, I dealt with the former Treasurer extensively as well, and most days I think we can both agree it looks like a pretty tough job.
Yeah. Your bank, though, is incredible health. Not only, in not only in the orbit of all companies in Australia, the largest company in Australia on the stock exchange, but also in terms of other banks. You've grabbed more market share in housing, more market share in deposits. It's strong. You've put yourself head and shoulders above others from a share price point of view, from a profit point of view, from a return on equity point of view. What's the secret sauce?
Well, what we've tried to do is continue to deliver a long-term strategy about, as you said, winning a disproportionate share of main bank relationships, obviously serving them very well, consistently executing, trying to be very disciplined with effectively our owners trust us with their capital that's allocated, so a consistent performance. And we've built up quite a bit of financial flexibility because we think that it's important. We think we're increasingly both the economic but certainly geopolitical and also just the volatility. I think it pays to have additional flexibility. So, we're holding more than $2 billion more than the central economic scenario and loan loss provisions, which is expected losses. We've got surplus capital at the moment, which is really set aside for unexpected. So that comes with different options that enabled us to grow the fastest actual growth of what we call risk-weighted assets, which is effectively lending. In the 6 months, we increased our investment by 11%, particularly into technology. That puts obviously pressure on earnings in the near term. Our expenses are up 6%, which is high for a business like CBA, but we think that's important, not necessarily for sort of our earnings this year, but will be important over the next 5 and 10 years. And I've seen the leaders of CBA continue down a consistent sort of strategic execution for many years, and I've sought to replicate that with the team. Okay,
yeah, but if anything, you've accelerated that. The technology push by the Commonwealth Bank is one distinguishing feature of this bank compared with its competitors. You've continued to make big strides into artificial intelligence now. When you look 5 and 10 years down the track, banking services are going to be quite different to what they are today. Now, you can either be disrupted or you can disrupt yourself. Right now, you seem to be going down that path of trying to disrupt yourself and to make a totally different organisation for the future.
Yeah, look, we think there's big changes, obviously, in customer preferences, but also the technologies are evolving at a rate that certainly I've not seen in my lifetime. I think importantly, that helps us deliver improvements to the customer experience, whether that be, let's say, in loan applications for our business customers. We saw, a big increase in sort of automation and ongoing sort of management of our customers' facilities, just making it easier for them to bank with us. When we think about things like cyber, scams, financial crime, you need to have technology that can cope with, a very rapidly evolving sort of series of threats and be able to deal with that very quickly, to be able to alert customers, for them to be able to take action, to try and minimise their loss, sometimes the bank's loss. And so we think over the long term that's going to be really important. I think it will be a differentiator for most businesses. And yes, I think there's both competitive threats that come with that, but also, competitive opportunities.
So the one thing about it is your return on the shareholders' equity right now is about 13%. Mm-hmm. With the big investment in tech, at some point do you expect that to rise? In other words, you get a bigger bang for your buck, mm-hmm. that you can either take costs out of the business relative to the overall size of the business, or simply that you can grow this business even faster.
Yeah, that's right. I mean, any business has a choice as well. I think, our return on equity is a bit over 13.5%. I mean, we're fortunate, obviously, we have a high shareholder base in Australia, either domestically or through superannuation. So fully franked dividends actually are very valuable. So if you gross up the return on equity for franking credits, it's even higher again. But yes, we don't manage for the single year of earnings, in which case, we could have delivered a higher return on equity, a higher cash net profit after tax, if we hadn't increased our investment envelope by 11% and 6% correspondingly. So we'll always have that choice. Our view is to keep investing, yes, and there'll be opportunities, I think, to realise those benefits, and that's understandably a question that we get from particularly our institutional shareholders. Where do I see in your profit and loss the specific improvements in different areas from the investments in technology? But we feel like we've been very well supported by investors, and very willing to support higher levels of investment where we can translate that into a better customer experience, larger share, and better risk-adjusted returns through any economic cycle.
Okay, so you came into this job in the aftermath of the Royal Commission, where banks' reputations were really shredded at that time. You've restored the reputation of the bank and its profitability, and perhaps in the eyes of its customers as well. You've seen what's happened to Qantas, you've seen what's happened to the reputation of Woolworths, you've seen what's happened to the reputation of, say, Optus is another good example of this. Does it make you fairly sober about this job that you do, recognising that though you might be right now considered to be one of the most admired companies in Australia, that can be lost very quickly?
Absolutely. It can be lost, as you said, incredibly quickly. Generally, it can take years and years to strengthen trust and relationships, and inevitably they can be unwound in a matter of days when it comes to things like cyber or technology incidents, hours. Economic cycles are usually a little easier to see, but I mean, corporate life, as well as the trust and your standing as an organisation, takes a lot to repair, and it can be destroyed very quickly. So it makes me, and should make everyone inside the Commonwealth Bank, very cautious about what's at stake.
And what you say, what you do, how you behave, all of these things.
Sure.
That can have an impact.
Absolutely. And as you said, as Australia's largest company, and the largest bank, obviously, alongside of that, there's an enormous amount of scrutiny. But you just have to recognise that's part of what comes with being a very large publicly listed company, and you have to understand and embrace that, and then recognise every decision that you make needs to be able to be viewed through lots of different lenses and prisms to be able to try to deliver the best overall outcome, and seemingly small mistakes can do large amounts of damage.
Matt Comyn, always great to chat to you. Many thanks for your time.
Pleasure, Ross. Good to see you.